Well, the Nifty is still down about 40 points. A bigger cash down coming on the Bank Nifty because that one is sitting with a cut of around 180 points. The mid-caps continue to outperform. That index is just holding into the green. But if you look at a few stocks that are moving around, ITC has suddenly come under quite a bit of pressure in the last few minutes. So there has been a sudden drop as far as the price of that particular stock is concerned. Separately, the other heavyweight that is coming a tad bit of pressure is HDFC Bank. So that one also is down about 0.6%. And add to that, ICICI Bank is also the other heavyweight, and perhaps that is the reason we are seeing that downtick as far as Bank Nifty is concerned, because all of these heavyweights from the banking space are also coming under a bit of pressure. But moving on, let's focus on one of the outperformers of 2019, and that is Dr. Lal PathLabs. The stock has gained 60% this year, but is trading at hefty valuations of 50 times FY20 price to earnings. Listen in to the management on his outlook for 2020 and on reports of Reliance Group entering into the diagnostic space.
If you study this market very carefully, it's highly fragmented. There are close to 100,000 labs, and there's extreme high level of competition already existing in the market, both at price level. Market is highly unorganized, so there are few players at the top, organized players who are really trying to offer services which really helping the market to shift from unorganized to organized players. So my view on competition is that any competition that is organized, branded, trying to offer value-added services to the consumer is always good for the industry, because it will definitely lift the quality standards and service standards. Any organized competition, branded competition, in my view, is always welcome to the industry. Realization, if you study the pricing pattern in the industry for the last 10 years, has actually been coming down. If you index it for the inflation, the prices what were existing about 10 years back today is much lower. And directionally also it's moving downwards or staying there. This is what the guidance we've always been giving, that the growth for us is always volume dependent, not too much on pricing dependent.
All right, and straight away to a CNBC Awaaz exclusive. Sources say that the IT ministry has issued a directive to all ministries saying that domestic companies should get preference when buying cyber security products. Sanjay Katkar, MD and CTO of Quick Heal Technologies, one of the potential beneficiaries of such a move, joins in to discuss the implications. Hi, Mr. Katkar. Good afternoon. Thanks very much. Has there been any sort of official communication from the government that, domestic companies would get preference? I mean, anything that you might be privy to?
Yeah, this guidelines has been issued. In fact, we have been communicated that they have come out with the guidelines. And hello.
Yes, sir, go ahead.
Yeah. So guidelines are there, and it has been communicated to, in fact, various government departments. And we have gone through the guidelines as well. Along with that, we have seen a new guideline that has come up 2 weeks back that talks about the conditions that they have for domestic players. They have asked to remove the foreign certification conditions for the domestic players as well. So this helps for the domestic players not to have, even they don't have Gartner Magic Quadrant certification or international certification, they can still participate in the bid actually. So this is a very good move by the government.
Okay, Sanjay, but could you help us quantify this particular order in terms of what could be the size that the government might be looking to bid out, and what part of it can Quick Heal get?
So here it involves multiple things. It's like services is one of the part, cyber security services, and then the products as well. So Quick Heal is purely into the products currently, and with that, it's like this the government initiative for cyber security. The whole government business for annually for cyber security is, if you see combined, it's more than 1,000 crores actually. Security services as well as security products. Now we have to see how these guidelines are really followed. I'll say implemented, because it's just a guideline. It's not a compliance or a compulsion which is there. So that really needs to be seen how it goes ahead with the PSUs and the companies, how they take it actually. Yeah.
Okay, but how many companies are in the fray? I mean, what's the competition for, say, a company like you?
Yeah, so there are quite a few cybersecurity companies, but it's like the competition is not much, in the sense very few companies are having all the big range of products. Most of the companies that are there are at a startup level, having a certain product or a certain cybersecurity solution for a particular problem, not the whole basket of products. Until currently is the only company is having full range of products for covering the cybersecurity products actually. So I feel competition is there, but it's not going to be a very big challenge actually. Yeah.
But Sanjay, as you mentioned, a lot of these requirements have been relaxed. So aren't you a bit worried that the competition would heat up further? And what is your current market share in terms of this government order usually?
So the markets are like, as I said, it's around 1,000 crores of cybersecurity spending that government does. And out of that, at least 50% should be products acting, 50 to 60%.
Okay.
And so currently, most of these orders are going to MNCs, and I feel there should be some change coming up. But guidelines is not going to immediately impact because we really have to see the implementation. And unless the implementation becomes very done strongly, it will be very difficult for like us to gauge it. But definitely, it's going to help us with big way, like getting more order pipeline from government departments. Actually, yeah.
Okay, but this will have to follow that entire bidding process, right? So won't your margins get compressed?
Yeah. In fact, we are also looking forward for some positive signs in the January cybersecurity framework that is going to be announced, and the data security bill that is yet pending, it's yet to come. So all this which is lined up is definitely going to create a very good environment for domestic players, and there will be a lot of new domestic players very much interested in taking this pie actually. Yeah.
So Sanjay, you said it'll take time for these policies to implement. So would it be too premature to factor in any kind of impact of this particular order in, let's say, FY21 or FY20? And so far this year, your performance has been a bit volatile, especially the quarter gone by. What's the expectation with respect to FY20 as a whole?
So the quarter here we are seeing fluctuation because of certain slowdown that has been there, because our security business major chunk is coming from SMBs, and that is where we have seen quite a big slowdown where the spending has been postponed, the decisions are getting postponed. So this fluctuation will remain for this FY20 as well actually. And for domestic consumer spending, which is like 80% of our business, that is again at a different level. Actually there we are seeing some kind of stability, not a growth, but at least it has stabilized actually.
Okay, Mr. Katkar, thanks very much. We'll touch base with you as and when orders start trickling in. But for now, big positive. And in fact, the quick heal stock seeing about 11 times the volumes that it normally sees. So moving higher and on very, very high volumes. Let's take a very quick break on that note. When we come back, the Indian Railways has decided to restructure its organizational structure. So we'll get